This is the ultimate candlestick pattern. This is the best candlestick pattern for entering trades. This is the engulfing candle. Make sure you watch this video because I'm telling you this will change your trading. So the engulfing candle, if you see in this scenario when we're looking at the bullish side, price comes into a fair value gap. Now we have a strong engulfing green candle that engulfs the previous candle with a lot of volume. That would be our entry to go long. On the bearish side, you see we have this green candle here. We tap into a bearish fair value gap. Then we have a red candle reacting from the fair value gap with lots of volume, engulfing the previous candle. That's our entry signal to go short. This is very simple, but this is very important for verifying if a fair value gap is going to go long or short and having a higher probability of winning your trade. Now the key here is price does not need to engulf the candle next to it. If it does, that's great, but it does not need to engulf the candle. Even though this is called the engulfing candle, I do trade it a little bit differently. It just needs to react from the fair value gap with sufficient volume. So let's say that, for example, this red candle could be all the way up here, then this candle taps in and then reacts bullish off of there. That would still be a signal to get in. So it does not need to engulf the candle, but it does need to react with sufficient volume. That is the key to trading this entry model and this ultimate candlestick pattern. Now I'll show you guys an example. In fact, I will show you guys a few examples. So if we look here, we have a break structure here above this high. So we'll mark out this break structure. Then we wait for what? A reaction from these fair value gaps within the structure. So if we see here with this candle, we get a reaction, we have significant volume. If you see like how this candle had a lot of volume when it was going up to this high, this would have been a great entry model to enter here long and target for these highs. Now if we look for another example, this is another great example here. So we see we break above these highs, we break above these highs. So we break above multiple highs, right? So we know we're bullish. We're looking to go long off of a fair value gap. So when we retrace back down to this fair value gap, you see price opens, comes all the way down here, taps it, and then goes higher. And it does engulf these previous candles. So here we have a textbook A+ engulfing candle. So we would enter, and then we can target higher to any of these highs. So these are just two examples. Remember, I will show you guys again the engulfing candle. Remember, it does not need to engulf the previous candle, but it does need to react from the fair value gap with lots of volume. This confirms that the gap is most likely going to be used to push price higher or lower. This is very simple, but it is very vital. I hope you guys enjoyed this video. Make sure to like, comment, and subscribe, and I'll see you in the next one.